Hey guys, this is a market update. In this video, I want to try and answer a question that I get asked the most, especially right now, which is about market timing and maybe selling, taking profits, and then waiting to buy back lower. I want to tell you my strategy here, very simply, and hopefully it can help some people, because we're coming towards the top end or the higher end of the price action that we're seeing. This, we call it a bull market, right? Which is, huge price move to the upside. But in my opinion, with my analysis, this little red box is really the area where you can't really place fresh capital in trades because you're at the very high end of the price range. So I just want to go over trading versus my kind of investment strategy here. As for Bitcoin right now, not the best. We had a good breakout, 2 weeks of profit taking. Maybe it's the summer, maybe price action is just a little bit weak. Maybe people are on holiday or whatever, like I am right now. You can see a hotel room, but yeah, it just is what it is. The breakout hasn't really happened. Look, there's still loads of buying pressure coming into BTC. Michael Saylor just raised another $2 billion from a new preferred stock that he issued. There's money here, and it's moving from retail into institutional hands. Those are very sticky, and so that money is still flowing in. So I still think we have the rest of this bull market to go. If you do trade crypto or Bitcoin though, check the link to Bybit in the description. If you click that and go through, sign up for an account and make a deposit, they'll give you a deposit bonus to trade with. Super juicy as well. Depending on what you deposit, all the way up to $30,000 is the deposit bonus they'll give you to trade with. I put this in the Discord server yesterday. I just want to highlight this as well, why I think this bull market will continue. And so for me, why my short-term trades are still on, and I want to start to get rid of them in this little red box here. So I'm not fearful that we're going to, start coming down. The reason being, the Trump admin's policies are just super bullish for risk assets. What I believe they want to do, and they have the power to do it, is debase Bitcoin versus gold and Bitcoin and other assets so that you get inflation in those assets, but you keep CPI low, and that keeps all the voters happy, right? People that have assets are happy because they see their assets are going up. People that don't have assets but worry about CPI and the cost of everything, as long as that's inflating at kind of 2%, they're not going to be too worried as well. And so a politician's job is to get votes, right? So they want to keep everyone happy. Big capex boom. This is what the Treasury Secretary is saying. Big capex boom. They want to ramp GDP as high as possible. They want to debase the dollar versus Bitcoin gold. Trump is even potentially saying no capital gains on, housing as well in the States. They want to pump asset prices high, right? They want to create inflation in asset prices. But they also want to deregulate and make energy cheap so that CPI is as low as possible. And that's how they want to win votes. And they're doing it. They're doing it all. And so that's why I think we just get this bull market continuing, because their policy is to ramp asset prices higher, keep CPI low through deregulation. So if they're ramping asset prices higher, Bitcoin goes higher, right? So that's why my little red box is still here, and why my short-term trades are still on. I'll come to short-term trading first then, and then I'll come to the longer-term investment strategy, which I think right now is actually really important to figure out as well, because if you're putting money into Bitcoin in the little red box, then there's a decent chance you will be drawn down on. So you have to make some decisions there about what you want to do with your capital, right? For short-term trading, I think the bull market continues, and Bitcoin, if we look at the previous two bull markets, seems to top out when it hits this blue line. This is just a log regression of Bitcoin's price over time. Not going to say, not to say that we're going to hit it perfectly, or that this is 100% accurate. So that's why this box is a huge price differential, right? From 150 to 250. I think we get somewhere in there. I have short-term trades on. I think the bull market continues, and I have to get out here. The reason being is that short-term trades are supposed to be short-term, and you have to get out of them at some point. My point was, somewhere near this top line, I will get out of them. That's it. We may carry on. We may have a price action that kind of goes like this and, kind of doesn't dip. That doesn't matter. You can't change your strategy after the fact, right? My strategy was get in at lower prices and just wait and sell somewhere here. So that's short term. Now, unfortunately for short-term trading, that also means that in this red box, once we get into this, I can't put any fresh capital into trades here, because I can't be putting fresh capital in that also I want to get out of within 3, 6, 8 months or something like that, right? There could be a range here, let's say 6, 8 months. That's short term, which is 6, 12. For me, short term is 6, 12 months or more, which is fine. But I can't put fresh capital in here for short-term trading. So that's done. However, for long-term investing, for my investment bags, I can still invest here, and that's because my strategy is much longer term, which I'll explain now. This is data on most of the investable asset classes out there. The important thing to look at is the annualized rate of returns on the right-hand side. So if we think that the rate of dollar debasement is around 7% a year, maybe for other currencies it's going to be higher than that. But let's say 7-8% a year is actually what you have to make before actually making any returns, right? So if the dollar is debasing 7% a year and your asset is going up 7% a year valued in dollars, then your asset isn't actually going up in value, although it is protecting you at least from inflation, which the cash isn't. Right? If the cash is going up at zero, or if you're in short-term bonds that over time, maybe they annualize at 2, 3, 4%, and the inflation rate is 7%, you're losing money. So that's the first thing. The second thing is my investment strategy is at least an 8-year time horizon. And so if I put money in year 1, then I can't divest or take out until year 8. And that's on a rolling basis. So the second year I invest, that would be, I can divest in 8 years after that, which would be year 9 from the first year. And so that actually sorts everything out for me, because how much money can you genuinely put in an investment and not draw down on for 8 years? That's probably less than you want to invest right now, right? Because a lot of people want to get in now and put a lot of money in. But if that money is something that you need within 6 months, 12 months, then it's probably not money you should be investing in something long-term like Bitcoin because of its volatility. That's really important when we get to prices like this, where 170, 180, 200,000, it's a great price, but the risk reward is getting to the point where you could easily be sitting on a 40%, 45% loss for a while. Even if we don't go down to the huge lows, even if we come up, draw down, and then go to new all-time high, can you not touch that money for 12 or 18 months, right? So what I do is an 8-year strategy, which is year 1, only year 8 can I divest, and then I know how much money I can actually put aside for those 8 years. The reason that's important as well is because of the compound annual growth rates. Bitcoin has a much higher compound annual growth rate, and over time, these growth rates make a massive difference to investment returns. So what I did, went to Grok. I used to do this this calculation here myself. So 1 plus r to the power of n. It's the compound interest formula. It's actually pretty simple. But what I did is I just asked Grok here, I invest 10,000 in year 1. CAGR, compound annual growth rate, is 20%. So in year 8, what is my investment worth? $43,000, as you can see here. So that 10,000 turns into 43,000 in year 8. Now from here in year 8, so after I've done my 8 years of hard work and hard grind, 8 years, now in the 8th year, I'm actually sitting on profits, and I just have so many more options. And because it's year 8, and I'm sitting on huge amounts of profits, hopefully, if you're in something that goes up from year 1, and then obviously year 2, 3, 4, 5, they can start to be divested in subsequent years. But if I'm sitting at year 8 or year 9, and I'm looking at a Bitcoin price of 170, 180, 200, and I'm thinking, well, that's fine, because not only have I got profits from previous years, but this money now is another 8 years, right? And that just sorts everything out from investing. It makes everything simple, right? Because it doesn't matter what you're buying now, right? The trade is that you were already in. If you haven't been already in for that long, then the only thing I can say is you have to do the grind. You have to do the 8 years first, and then everything sorts itself out. If you haven't done the 8 years, then unfortunately, you're going to be much more susceptible to the volatility of BTC, which you have to go through a bear market to be a Bitcoin investor, right? Every Bitcoin investor's gone through a bear market or multiple 70% drawdowns. It's par for the course with BTC. But if you're trying to not go through that, and if you're trying to not have that volatility, you're kind of in the wrong asset, because this is a volatile asset. You want the returns, you have to wait for them. You have to do 8 years first. Up here, unfortunately, the short-term trading for this cycle is kind of coming to an end, right? Up here is not the time to start trading for 20 or 30% moves, because the risk reward is for a 40% drawdown for a while or more. And so, yeah, we're just coming to the end of it. I think that's why a lot of people are asking these questions, because they inherently know like the juice of this trade may be coming somewhere near an end. And are they comfortable with money they put in now? In the little red box, that's got to be an 8-year time horizon for that, because my short-term trades are starting to get out here no short-term time horizon for me here, just long-term. I hope that explained the difference clearly enough between trading and investing. Trading is you just get in at a certain price with money that you can afford to lose, and then you have some price target, and that's it. Whereas investing, price agnostic, and it's actually about time rather than price, because as long as you're in the asset that compounds at a higher rate than others, you're going to be absolutely fine. But if you trade crypto, the Bybit deposit bonus is down below. You can get up to 30,000 as a deposit bonus there. I'll link the crypto course as well down below if you want to get into the private Discord server where I have other research like this and post regularly. I'll link that down below as well. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.